Terrific. Hi, everyone. I hope you're enjoying the afternoon with David and friends, learning all sorts of things. And hopefully, I'll continue that with my technical work and my perception of how I look at markets, which has been an ongoing process for the last, let's see now, since about 1980. So I've seen a lot of markets, bull markets, bear market situations, and I like to think that I have some experience with these things and how to interpret markets. And in so doing, after I left Wall Street, I created mptrader.com about we're in our 20th year or so. And what it does is it's a chat room with charts and discussion about what particular markets are doing, patterns are doing, fundamentals, technicals, whatever anyone wants to talk about. But the way I view things, okay, there's my system trade station telling me the market is closed in case we didn't know it. In any case, what I seek to accomplish on on my website mptrader.com is when I got on Wall Street, I kind of did things upside down. When I discovered chart work, my sense was that uh, the charts would tell me possibly where things are going based on patterns. And then I could back into the fundamentals to see if the fundamentals supported what the charts were saying. And I found that to be a useful exercise, and it's done well for me for 4 decades. So so in any case, what we do on MP Trader is every morning when I get in, uh, well before I start posting about anywhere from 7:30 to 8:30 a.m. Eastern time. And I usually, this is today, for instance, this is the beginning of the first post. And I always try to post the E-mini S&P and my perception of the trend, where the support and resistance levels are, and the various scenarios of where it could go. And you click on it and it enlarges the chart. And so this was as of this morning. And then I create a description, or I write about a description of what I think the big picture, little picture, intraday looks like, and what to look out for. And the subscribers or members, they use this to trade S&P, S&P futures or SPYs or any other derivatives and ETFs that apply to my analysis of this or their analysis combined with my analysis. I think most of the members we have do their own analysis and then use mine as either confirmation or refutation of what their own thinking. Not that I'm right, but it's worth knowing what I'm thinking in any particular time for them, and they can fade me, they can do whatever they want with it, but at least they know what I'm thinking, and they at least as a baseline respect what I'm thinking. And so this morning I was also try to come in with some sort of chart setup that I think is interesting. This morning it was ARK Innovation Fund, ARKK, the ETF, which is Kathy Woods and Kathy Wood, as it were. And of course, she's had a mixed track record, to say the least. But she's no dummy, and I respect her perception of things. And it just so happens this is what ARK looks like after getting slammed for, I don't know, 3 years probably. So let's see if I can. Well, I don't have the chart in front of me. This is my picture that I posted on the site, and here are the leading or the top 15 holdings of ARK, and I describe what I think is going on in the base and the pressure that it's putting on this breakout area. And it's something that our members now can keep on their watch list, as it were, and we'll watch it together. And when if when it breaks out or breaks down, we'll see it together. And so I update all day long. It's a diary. Members come in and they tell them, we're talking about the bridge collapse outside of Baltimore and what that might mean. And you can see all the different posts. But up top is our coverage list. And this will give you an idea of all the different chart analyses and discussions we have about all sorts of various stocks and ETFs and indices. And so we cover all sorts of sectors and names and indices. And what else can I show you? Also, every weekend I put up a top call for the week. This was SLB, and from when I started watching it, where that is when I brought it to our members' attention, and we put it up. I put it up on the weekends, so it's just another name or index that is on my or on our watch list that is moving. So there's a thumbnail sketch of what I do at MP Trader. Now, let's see. Okay, so this is the charting package I use, and you can see that there's years of annotations on these charts, and they just keep it's just a running diary of annotations and how setups occur. This just happens. I just happened to be looking at this earlier, and this is the agricultural ETF DBA, and well, it's no accident that it looks like this with inflation and food prices and grains and meat prices. Everything's going up, and sure enough, DBA is going up too. And here it is today, and it looks like it's going a lot higher. So let's not get into the Fed just yet until someone asks. But this is usually an inverse relationship to interest rates. So we'll just leave it at that for now. Anyway, this session is supposed to be about you asking questions. So let me see if I can get into the chat. Okay, let me go from the top. So that was for Lee. Bonds. Let's see. That's okay. PLTR. Well, I don't know if that PLTR and PG are for me, but I'll take them anyway. Oh, holy cow. Wait a second. PLTR, PG, Lulu. Let me write these down. PLTR, Lulu, and PG. Okay. Well, just so happens that I did these. Let's see. Let me go over, and since the last, I think the last time I did David's webinar was on a Wednesday after the Fed meeting, and what a difference today was up until the last 15 minutes when you saw the S&P's tank. It was like watching paint dry. So let me see here. Let me go over to retail. And I'll show you. Oh, so what I was saying was in the interim, I bought a new desktop with lots of power because my desktop from 2 years ago, whenever I would upload a new one of these workspaces from TradeStation, you can see there are a lot of charts in here, and they're all part of my retail page. And most of the time, and hopefully I won't jinx us, but most of the time when I had my other desktop, it would take an interminable amount of time to load while you were sitting waiting for it to load. And most of the time it would freeze. And then David and I would have to juggle some balls to keep things rolling. Okay, here is Lulu. Now, Now you notice that the other chart I had up here was Nike. They reported basically in the same evening, and they both had some uh, some negative results. But as you might see from my hieroglyphics here, my uh, annotations, this is where I think all eyes should be focused on Lulu. That is 338 to 355, and I think we made a new low today. This was from yesterday, so 387. Yeah, so we went to 385.88 today, made a new low, closed at a new low for the most part, and everything's pointed down. And the way I look at Lulu is this is the recent high was a trap. So, whoops. So here's your bull trap. Got over 485, spent a week or so and ran out of gas in this up leg. And now, after this trap, it is now in this gap down after earnings. It is or was the central thrust to the downside. They took out this trend line that went back to March of a year ago, and which is significant. And it couldn't even get back up to challenge that. It's just gave up after hitting about 400 to 405. And now I think Lula's in trouble, and it's going down further. All this congestion area in here, 361, 364. That's where it's going next. If it takes that out, it's going to test this level here, which is critical. And it's a trend line that goes all the way back to the pandemic lows. So Lulu is going to have a challenge. Now, I don't know if it's because Vuori is out there, which is pretty sleek stuff, sportswear, athletic gear, or whether or not the consumer is getting tapped out finally. They keep telling us that pandemic money just kept stretching, which is so funny. I mean, here we are 3 years later, and I don't think anybody has any pandemic money left. I think it's all credit card money, but that's just me. So, anyway, with that in mind, I think that Lulu has some challenges, as does Nike. Now, whereas Lulu had an uptrend that made a new high in December, Nike Nike looks a little different, don't you think? Nike made its high in November of 2021. You can make the case that it was a series of big top breaks down from, you can call this a head and shoulders, breaks down. And remarkably, I would say like 80% of the head and shoulders, they don't break down and they blow up like this, and then they keep going like the S&P did last year. However, this one kept going. So it takes out the neckline, gets clobbered. My target was met at 83 to 85. And then it went right back to the neckline. That's not a coincidence. So it went right back to the breakdown area. What is this, 125, 130? And now it's unwinding again. And here we are today. Here is Nike today testing the pandemic trend line, uptrend line. The same trend line that I think that Lulu is headed for in the next several days, maybe in the next 2 weeks. So if Nike takes this out, here's the prior low in October of 2 years ago. Well, October of 22. And that's at $82. I think it'll take that out. And I have a second target, lower target of 70 to 72, and then 60 to 62. So I think this whole edifice, this whole massive series of tops is bearing down on these lows, the low zone between 88 and 82. That's going to take that Nike will take out and head lower. So if this sportswear division or sector is any indication of the health of the consumer, well, they're going to be using that extra money for food because food prices are going up, as this tells us. And we're going to be buying less great clothes to work out in. Okay, so that's my 2 cents on Lulu and Nike. So Palantir, let's see, where did I put my Palantir chart? Hang on, Palantir. I think I put my Palantir chart in big technology. Okay, so and then we'll go over to Procter and Gamble. Let's see if Palantir is here. Now, if it's not here, I put it in with the Magnificent Seven because I guess that's where it's going to end up as one of the Magnificent Seven. Just in case, let me just check this out for a minute, and let me see what else we wanted this. Hear Mike talking, but no sharing of his screen. Does anybody else? Do you see my screen, David? If you're listening. It says I'm screen sharing.
Yeah, I see a bunch of different charts right now,
Right. You
and
see semiconductor chart up there now?
SMH
Yeah.
chart. Yeah.
Okay. So I don't know. Okay. Well, other people are saying it. They can see it. Okay. Fair enough. Uh, okay. Let me just see if PLTR is in here. Otherwise, I'll tell you what I think of this SMH chart. It'd be nice if TradeStation wrote an AI program where I could ask it to go find my Palantir chart in what, whatever workspace I put it in. Now, there's an idea. I'd actually pay up for that. Anyway, okay, so SMH, this is basically an NVIDIA chart. So, um, you know, uh, if you want to overlay NVIDIA on this, this is what you'll end up with. It looks like it's not done yet on the upside. All of my big moving averages and my minor ones are, or shorter term ones are pointed up. So I just thought I'd throw that in there. All right, Magnificent Seven. We'll go over to the Mag 7, which here, this happens to be my NVIDIA hourly chart. It broke down on an hourly basis, hasn't taken any major trend lines. This trend line goes back to its earnings low right before it beat earnings the last time on February 21st. And that cuts through at about 912. So tomorrow morning, we'll have to see if it can hold somewhere between 9.25 and 912 and turn up again. But let's see. If Palantir is not here, then I will start. I will take you over. It doesn't look like it's here, so I will take you over to my workstation. That is my experimental station, and we'll put in Palantir. All right, and that's not it. What is that? Permian Resources. Oh, no wonder. It's an oil stock. Okay. So what I have on here are my 1017 or my shorter term MAs, 50-day MA. These are simple MAs. And then I have the 100 and 200-day MAs, simple MAs. Sometimes I use for faster reaction time MAs, exponential 8 and 20-day MAs or 8 and 20 period MAs, depending on what I'm looking at. And my formats, basically, I go from 15 to 30 to 60 minute, 2 hours on some basis, some platforms, and then 4 hour daily, weekly, and monthly. And so my inclination here is to um, is to convert this to a weekly just to see where Palantir is coming from on a weekly basis. Okay, so you can see that Palantir's massive move. Now, of course, we can call this anything we want. We can call it, I would call it a saucer or a cup and a handle, right? And the handle, usually the handle, after it ends, the ensuing up leg approximates the up leg into the handle. So, for argument's sake, let's say we went from 7 to 20 or $13, and this is where the handle ended. So 13 plus 16 is 29, and 29 would be about here. So, just as a general rule of what our expectations could be for Palantir. So the question is, what is this? Right? And right now, now keep in mind also that it at $30, 29, $30, there's an unfilled gap back here that goes up to 32. So it may be that Palantir's target really is 29 to 32. All right. Once it resolves this. Now let's go back to the daily and see if we can, and then we'll go to a 4 hour to see if we can determine what it's doing or what it's been doing since it's hit its high. Now this high on the 7th or the 8th of March should ring a bell, because that's the day that Nvidia made its high at 974. And anything that is in Nvidia's, I guess I would say, um, uh, that exhibits NVIDIA form and that's connected or attached to AI in a technical sense, exhibits the same pattern as NVIDIA. So, for just so you see what I mean, this is NVIDIA. So NVIDIA has actually tried to retest its high. I don't think that that's a failure yet, but in any case, this is March 8th. And so everything since March 8th, NVIDIA is acting better than Palantir. So the question is, what happens next? Well, one of two things pops out of NVIDIA to me. One is this right here, and this area right here. Let me just make it lighter so you can see it. Okay, so this area right here is the support area is 220, 2290, 23 roughly to 22, 2180 to 23. Now this is critical area. It happens also to be the 50-day MA is at 22. So any weakness in Palantir, in my judgment, has to hold around $22, worst case, to then loop back up and make a new high, and to tack on another up leg that gets into this more measured kind of um, upside target zone. If it breaks this and closes under here, then I think this big up gap after earnings comes into play as a magnet on the downside. And you got the 200-day down here at 18. So if I were to sum it up, I would say 22 or else for Palantir for another loop up to new highs. Under 22 on a close, it runs the risk of going into a correction. And chances are, if that happens, that Nvidia is going to 700 before, while and Palantir goes to 18. So that's what I think about Palantir. Now PG, which is a whole different ball game and a defensive stock, and it may be that it's it's participated for sure. Let me elongate it. How many years are in here? Let's go back 10. Okay. So what you see on the screen is, yeah, this is 2021, June of 2021. So it's 3 years of data. And you know, to the extent that PG is a store of value, and let's see, what does it do for a dividend? Uh, Using my other screen. Okay, so well, you don't buy it for its yield, 2.35%. So now what do you do with it? All right, it's 142. So this is December. This is October. So for argument's sake, let's say um, 142 to 162. So it's up 14%. It's nothing to sneeze at. It's not participating like the S&P has. But what is it going to do now? Seems to me that it's getting really tired. You see the way momentum peaked in its after earnings thrust to this high. This was the up leg where momentum peaked, and each successive up move, little higher high and PG, was accompanied by a lower momentum reading, and you don't really want to see that. So I'd say that PG is going to is more vulnerable than not, and it's probably going to test this level in here, which uh, which means that here we are at 160 and a half. It's going to test a 50-day, and here at 157 and a half, 158. If it doesn't hold, I think it's vulnerable to really getting hurt. This is the 100-day moving average and the 200. So PG looks like, after it broke out of this year-long topping or year-long resistance zone, it should be a lot more exciting. In other words, it should have really taken off. And you can make a case that, if PG was doing what it's supposed to be doing, that you can make a case that this is what it would have been doing, or where its upside potential would have been, should be. Okay, so you're in here. This is the width of the base, and this is the extension of the base. The width of the base gets you to 172. Now, as long as the 50-day moving average holds, then it's, I can't argue that anything's broken down, and that if it loops back up, then over the ensuing months, we may well get up to this 170 to 172 area. But if the 50-day moving average is broken and it closes below it, I think that this momentum divergence situation will need to be clarified or resolved, and it will be to the downside, and it will be into the 200-day moving average. That's what I come up with for PG. Okay. Okay, so let me go over to some other things that, let's see how the futures closed. Okay, so so this is my most recent post on the site. I think I did it around 2:30 Eastern time, and I just wanted to refresh everybody's memory of my perception of where we're at. And what I had done was I had taken the coil that we were in, the initial high on the day that Nvidia made its high, the S&P made its high, and here's the 308. This was a Friday, and it was a jobs report, and we had peaked at 52.56.50, and then for the ensuing uh, week and a half, we had a series of higher lows and higher highs. No, sorry, lower highs and higher lows that created a coil formation. And after this low, uh, we took off, or it took off. And so I am labeling this coil bullish. In a big picture pattern, it would be a bull flag pattern, a coil, a flag, but it's a bullish digestion period and a continuation pattern. And here's where we took off. I think that this is where this pattern will resolve itself before it's complete. Of course, there's always if then. So as long as 5250 to 5260 contains any more of this. So I think here's the first part of the up leg, here's the pullback. As long as 5250 holds, I think we loop up and take off again. Now, it may be that, the PCE data, while I'm talking, I'm going to get this done. It backs up my system. Hopefully it'll be quick and painless. Um, so it may be that this pattern just goes sideways to lower into Friday when, all right, terrific. It goes into Friday's PCE, personal consumption data, and we get the inflation data, and there's a sigh of relief or an oh no moment, who knows which, but it may be that we're not resolved, and nobody wants to add on to. This is a 15-minute chart. No one. Here's the hourly version of it. And if I elongate that, um, it goes back to the beginning of the year, and you can see that the uptrend is still very much intact. The question is, is the market exhausted up here, and are we rolling over, or is it rolling over? And 5250 is one of the levels that under which I get a warning signal. Once 5186 is taken out, which was where the coil pattern that I showed you earlier ended, once that's taken out, I think it's over and out. That actually, from a big picture perspective, it is over and out. So here is the October low. This is a 4-hour chart of futures. And this is that goes from last October when we hit the low. And here we are. And if 5186 is taken out, I think that this is over, in which case we go into some sort of correction of this. And, if you want to put some Fibonacci's on there, and if in fact we do get below 5186, where could we go on a Fibonacci basis? Well, the 382 is 4900, so that's a correction. That'll be painful for the longs, and if your inclination is to try to capture a pullback, I think it's the first time in months that a pullback will actually yield some rewards, instead of slamming every one of the bears in the face. Now, let's go over to, speaking of yield, let's go over to yield, because my longer term view and my relatively shorter term view are different. Um, and on a longer term basis, I'll show you what I think. So that's a yield chart. This is monthly yield. Whoops, I don't want that monthly chart. I want the other monthly chart. Okay, so this is a monthly chart that goes back to 1985. Well, it could go back even earlier, 1984, when it was 14%, 10-year yield. I can make a case that this is a massive base, right? And we're working on, if there's any symmetry in the base, we're in the mirror image of this left shoulder, if you want to call it that, over here. Now it could take years. I mean, this one, depending on how creative you want to be, we could say that this went from the year 2000 to 2007. So we're talking about years. So if this is the shoulder and it started in October of 23, it could be 2030, and we'll all be a lot older by the time this thing breaks out to the upside. However, um, in here, if 5% is the upper level of the breakout, what is the lower level? It's 3.25 or 3.30, 3.3% on 10 years. I'm thinking that we still have some unfinished business on the downside before we move back up and retest 5% and higher. Now that chart was monthly. This is a daily of 10-year yield. So here's the 5%. And here's the first down leg, corrective down leg of the bull move from 0.4% at the pandemic low to 5%. This is the first down leg of, that is the corrective leg of that huge up move. So that went from 5% to 378. And I'm thinking that basically all of the yield up move for 2024 so far is a counter trend move against this. And that when it's done, we're going to roll over again. We're going to take out 390 to 378. We're going to go down to the 340 or whatever it is. And that will be this dotted line. And then it'll be the time to expect yield to go up. Now, what would make that happen? Well, you know, most everybody is afraid of supply, too much treasury supply. Can't argue with that. Higher inflation, or inflation that's sticky. I guess we can argue about that, but it's there. It seems to be a problem. And general ineptitude, fiscal spending out of control from Congress. So that those elements, among others, I guess, certainly combined, do not argue for lower yield, unless of course the economy is about to roll over, and that one of these Thursdays we're going to get a unemployment claims that's goes from 200,000 to 350 or something crazy, and then it'll be an aha moment that the labor market's cracked. And what we looked at before with Nike and Lululemon, just maybe that's telling us the consumer is tapped out. And then we'll find out credit card delinquencies are rising fast. We'll find out that bankruptcies, business and personal, are going up. And meanwhile, food prices are rising. And you see the picture. So those dominoes, apart from the plumbing of the treasury market in the fundamental side of the economy, just maybe it's really not as strong as everyone thinks or we're being led to believe. And secondly, uh, I have a lot of respect for Jay Powell because I think he's navigated a situation that is second only to Bernanke, who, you know, navigated us away from disaster. But in navigating away from disaster, they created their own problems, and Bernanke created. I don't need to go over that. We all know what they are, and I think that the distortions created by the Bernanke experiment, QE, et cetera, zero interest rates indefinitely. The distortions are still yet to come out, and we're all going to experience those. And hopefully, we'll be able to handle them. And then and then Powell now is holding the bag. And I think it's inevitable that Fed governors, Fed chairman or chairwomen, both, they make a mistake. If they're long enough, they're caught holding the bag. And yeah, Powell made a mistake by not recognizing inflation was taking off, and and I think the next mistake is that he might be talking dovish, or the markets may think he's talking dovish, expecting 3 cuts this year and not reducing the dot plot from 3 to 2 and all that nonsense. But I really think that in the end, we're going to look back and we're going to accuse him, as it were, of waiting too long to cut the rates. And the markets are going to spiral down in a big way to let him know he's too late, just like they did when they told him he was too late in raising rates to combat inflation. So this chart, this daily chart of yield, I think if this is a double top or a triple top at 435, February, March, 4.35%, right as we speak, the 10-year yield is at 423, sitting right above, a couple of basis points above both the 200-day and the 20-day MAs. And if that breaks, Friday is the next time it could break. And Friday we have the personal consumption expenditure, PCE, inflation data, and a Jay Powell speech. And I don't know what that's about, but if that's supposed to contain monetary policy, I think it's a problem. Well, could be a problem. And this chart could break one way or another. If it tanks, or if it goes down through 417, and takes out this trend line, and the 50-day MA, after breaking below the 20 and the 200, I think that the yield will be on its way down here. And the reasons for that will be that I think initially it'll be that if this Friday tells us anything, and the market goes down, that is, yield goes down, it will be because inflation is very well behaved, and now Powell ought to have that elusive last bit of confidence he needs to actually cut the rate. And maybe if that's what happens, maybe Friday later in the day when he speaks, maybe that'll be incorporated into his speech. I have no idea, but yield will come down on that. Now, the question is, after that, the economic data, if it starts to deteriorate, that's when the stock market has a problem. So it may well be that if my scenario that I'm kind of connecting the dots to with you here, if yield goes down and the S&P then takes off because it likes what it hears from Powell, okay. So this is the daily chart of the E-mini futures, June S&P. So if yield goes down and it's inflation related, and the market thinks Powell is going to now cut rates sooner than later, and maybe 3 or 4 is on the table for the year, then this move takes off, and we go to 53.80, 400, 5,400. Yield tanks, goes down to 4% and under until the economy deteriorates, and that would be the next phase, and that's when the stock market rolls over and hits the skids. So that's one scenario or set of scenarios that I think is very plausible in the next 2 to 6 weeks, that we start to get wind of all that. So anyway, let's see if whoops. Let's see. Can you take a look at Adobe and PA? Yep. Okay, where did I put Adobe? ENW. Let's see. Oh, I think I have them here. Let's see. Adobe. Thank goodness it's here. I don't have to search for it. Okay, so I'll put up my daily chart of Adobe. And if need be, I'll go to my 4-hour chart of Adobe. Okay, I don't need the 4-hour chart. Why is this? Oh, there it is. Can get rid of it. Okay, so Adobe is here. All right, 200-day. All right, so this is a pretty treacherous chart. Adobe is here, and so this is what I'm looking at, right? Potentially a huge issue, double top, and both tops led to, this one certainly led to a vicious bear phase. This peak failed to get through this one, and here you're unwinding. And as far as I'm concerned, as long as Adobe is trading below the 200-day and below this ridge that it gapped down from, that's part of the gap down from earnings. So let's call it 532 to 550. As long as that zone is intact, it will be a lid on any rally effort on it from Adobe, and Adobe will have unfinished business into this area here, which is a couple of things, which represents a couple of things. One is the trend line off of the major corrective low, cuts across the price axis somewhere around, let's call it 440. An unfilled gap back here on the way up in June of 23 that would need to be filled under 252 or so. So we're talking about 240 to 250 as the optimal initial downside target zone for Adobe. Now, if Adobe takes off and closes in here, let's hang on. Let's see when the last time I updated this was. Okay, so here's the my 4-hour chart of Adobe. And here, whoops. Come on, Mike. Don't mess up everything. All right, so this is today, where we closed. and everything's confirmed with Adobe. So I think that what Adobe is doing is, even though it's holding in here in and around what low is this, 486 or so, 485. I think this is a bearish digestion period after it got slammed. So that's 485. So we're talking about 585 to 485, $100 decline in the reaction to earnings. Now you're having a sideways digestion zone um, of $40, $50, which makes sense. It's pretty much a third to a half of what it lost in just after earnings. And then I think this bearish digestion breaks to the downside, and my next target is 470, 480. If not, that trend line that now is around 440. So I think that Adobe's has unfinished business to the downside, and I'd be really careful of owning it before. I think the minimum target I had come up with was 470, 480. You got the 485. So the next time down, if it takes 485 out marginally, it goes into this zone, 470, 480, and then has a big up, a vicious kind of up spike on volume. Then I think Adobe, you can take a shot at Adobe on the long side. And PANW, that's another one that, let's see, maybe it's in here. I reviewed it recently. But I might have to go to doesn't look like it's in this group. Let's see. I've got 5 minutes. Let's see if I can load this in. I'm looking for technology 3. All right. If it's not in here, I'll go back to my my lab page where I experiment with annotating charts, and I'll do it in there. But let's see. Oh, there it is. How about that? Okay. Okay. There's the okay, so let me well, this is self-explanatory. This is great, so I'll leave it at that. All right. So this chart goes from the major corrective low in Palo Alto at 132.22 in January of 2023 to the high at 380.84. And it had a beautiful channel, took out the channel, and then earnings put it right back into the channel. And not only into the channel, it traversed the channel all the way to the downside and held there. So that is really important. And let me see if I have a day chart. So here we go. So it just so happens that at the time when it hit the bottom of the channel, the 200-day was right at the bottom of the channel. So you had a double reason in here around the 260 area for Palo Alto to hold and to rally. But for all of the power that was generated down here by the 200-day and this support slash uptrend line. There hasn't been much bang for the buck. Now there was initially, but look at where Palo Alto is now. Now this to me looks like a bearish digestion period, right? So now it may well be that I got to wrap this up. So it may well be that this whole area from, let's say, 320 to 260 will turn out to be a sideways digestion area ahead of what? The question is, where will it go now? My sense is that this is a bearish setup. Sorry, a bearish setup that is destined to take out this channel line. And if it does, takes out the 200-day and the channel line, where is it going? Well, I think it's going into here somewhere. That is, let's call it 230 down to 215. And then I think it'll have a decent rally. But this looks like a pretty significant top to me, or peak. And any rally into this area, I think, will be sold, and it's going to roll over into the 215 to 225, 230 area again. We'll have to keep an eye on that one, because I know people want to, lots of people are looking to get into both these stocks, Palo Alto and Adobe. But anyway, I'm about out of time. So I hope this was useful. If you want to do this on a more regular basis, or you care what my crazy pattern analysis and perceptions of the world are at any given time, go over to mptrader.com and take the $7 trial and see if it suits you, and see if you can justify, staying with us. Um, I think it more than pays for itself, um, but that's your call, and I hope it today proved useful. And David, thanks for having me on again.